Hello everyone, welcome to another episode of the Daily Gwei Refuel, where we recap the latest news in the Ethereum ecosystem. I'm your host, Anthony Sassano, and it's the 28th of May, 2024. Alright everyone, let's get into it. So kicking off today, I wanted to have a discussion around the ETH ETFs, in particular when they're actually going to start trading, because as we all know, on May 23rd, the ETH ETFs were approved, but they did not start trading on that day or the day after, whereas with Bitcoin, they were approved and started trading shortly after. Now this was, of course, because there wasn't all of that setup leading up to the ETH ETFs being approved that there was with BTC. It basically caught everyone by surprise, and it was a complete 180 in the end by the SEC and the Democrats at large here. So we're left speculating on when these things will actually start trading. Now, it's not totally speculation. We're going to see movement on this, which will indicate an actual timeline here. And this being like the S1 form. So there's two forms, the 19B4 forms, which have already been kind of put forward and approved. And then there's the S1s, which haven't gotten effective yet. But when they do, or when we see movement on them, then we'll get a better idea of when these things are going to start trading. In terms of actual kind of numbers here and actual kind of time frame here, you can see Nate put together a tweet where he basically says, nobody knows for sure, but his expectation is that they'll start trading within the next few weeks and with a maximum time limit or time frame of 2 to 3 months. I don't think it's going to take that long. I do agree with him that it would happen, or should happen in the next few weeks. I honestly don't think it matters if it's a few weeks or 2 to 3 months. I actually think the longer the better, because it builds more hype, right? It builds more time, or it creates more time for a lot of these TradFi institutions to start their marketing machines up and to start getting that AUM in, because I'm very curious to see what kind of numbers the ETH ETF does, especially compared to the BTC one. I don't think it'll get the same inflows as the BTC one, because BTC was in its own little kind of realm there, where essentially it was the first crypto asset to get an ETF, right? There was a lot of pent-up demand over quite a long period of time. There was a lot more attention and marketing on it than there was with the ETH ETFs, but who knows? That can change very quickly. If it takes 2 months for these things to start trading, we could see some pretty good inflows into the ETH ETFs. But I think that's like the next thing people are looking at. You know, you've got the Bloomberg guys basically saying that they expect the ETH ETFs to get around, I don't know, 15-20% of what the BTC ones got. Like, I wouldn't be surprised by that, to be honest, but I think that it would probably be closer to around 30%, which is the market cap difference, or 35% if you're doing like a market cap weighting here. But it could be more than that, or it could be less than that. We just don't know at this point in time. So yeah, I just wanted to kind of put that out there, because I know a lot of people are wondering, you know, when are these things actually going to start trading? And that's the kind of time frame that we're working with right now. And we haven't really heard anything since the ETFs were approved, because they were approved on Thursday. Then we had one kind of working day on Friday. Then we had the weekend. Then we had a public holiday in the US yesterday, being Monday. And just today, the markets are coming back. So we may see some movement this week on the S-1 forms, which will indicate to us, give us a better picture around what the time frame for the ETH ETFs going live for trading will look like here. But as I said, the longer it takes, the better. I actually don't think that ETH's going to have any trouble going up from here, especially to all-time high, especially to like 5K plus sort of thing without the ETFs, because of just, you know, hype and narrative alone. And then after that, I think that once the flows start coming in, once people start seeing and what's going on there, we're definitely going to see, get a better picture here of what's going on. Now, there's one other thing as well related to the ETFs that I wanted to talk about, that I see a lot of people talking about, is what is the outflows going to look like for the ETH trust? Because we saw with the GPTC trust from Grayscale, I think they ended up losing like over half of their AUM since converting the trust into an ETF, because of the fact that they had really high fees on their ETF. I think it was like 1.5% or something like that, as opposed to the 0.2% or 0.1% or even no fees on the other ETF. So there was a massive amount of outflows out of GBTC. As I said, I think it was over half outflows there. So people are naturally wondering, what are the outflows going to look like for ETH? I think it's going to be different. And look, I'm not going to go out on a limb and say I'm super confident in this prediction, but I have been looking and studying the facts and circumstances here, and I have kind of come up with a bullish thesis and also a bearish one. So my bullish thesis on the kind of, I guess, conversion of the trust here, and why I don't think the outflows are going to be as great as they were for GBTC, is because I think that Grayscale learned their lesson, and I think that they're not going to keep their fees as high as they are now for ETH. I think they will drop their fees down. I don't know how low, but I definitely think it will be lower. And they've also spun up their mini trust, which is supposed to be essentially they're even lower fee offering ETF that Grayscale is offering, and they've got one for ETH as well. So they've already spun that up. They're not waiting. They waited with the BTC one, but they've already spun that up. And they've also made some management changes. I don't know if you guys saw recently, but Grayscale's CEO basically got fired, so was essentially forced to step down. And I think that was because of the fact that it's really hard to keep your job when you lose, over half of the AUM of your top product because you kept the fees high. And I think they took like a bet. It was a calculated bet, I think, and they've still got a lot of AUM, don't get me wrong. They've still got as much AUM as BlackRock's ETF has, but BlackRock's also hasn't existed for many years here. I think they took a risk, took a bet here, and it didn't really pay off as they imagined. So I do think that we could see ETH get converted into an ETF, but not have those high fees in order to stem any of the outflows that could happen because of that. Now, I think that the high fees aren't the only reason why there were outflows with GBTC. For those of you who may not be aware, GBTC and ETH traded at a discount for a very long time, where essentially they were trapping people in these assets and at premiums too. I mean, imagine if you had FOMO'd into these GBTC and ETH products when they were trading at like a 20% premium during the mania of 2021, and because they're a one-way vehicle, you couldn't essentially convert these things to the actual asset. And then once the premium went away, went into discount because of the bear market. Now, not only are you holding, these products and during a bear market where the underlying is going down, but also there's a steep discount on them. The discount, being 5, 10, 20, went 25% for ETH before the ETFs got approved. Now ETH, I believe, is at like a 1% discount or something like that. So if you are someone who had been waiting for that discount to close over time, and prices are good again, prices are back to basically all-time highs again, then you may just be like, okay, well, I'm done with this. I'm going to, cash out here, and maybe I'll think about re-entering later sort of thing. So I do think there's going to be outflows from that. And naturally, there'll just be outflows generally too. But I'm very curious to see if those outflows are going to be similar to GBTC, or if it's going to kind of, or if the bleeding is going to be stemmed there. Because if you're Grayscale, you have to be looking at what happened with GBTC and think to yourself, well, if we keep the high fees on ETH, then the exact same thing's going to happen, where essentially over half of the AUM of ETH will flow out into maybe even into other ETFs or out of crypto completely, which I think last time I checked is around $6 billion worth of ETH. That's half of what they currently have, five or $6 billion worth of ETH that would go out of that and possibly go into other ETFs or just be sold generally. And that is, I guess, like the bearish case if it happens the same way as it happened with GBTC, because that could put I don't think it would cause the price to go like down in a big way or anything like that, but it could put us into a sideways pattern for a little while there. But that's really the only bearish kind of thing I can see on the horizon here. Everything else is extremely bullish right now, actually, which actually perfectly segues me into the next thing I wanted to talk about, which was a tweet that I put out today where I said, billions of dollars has not gone into ETH because of the past regulatory uncertainty around it as an asset. Now, though, with the approval of the ETH ETFs, the market will re-rate ETH based on a removal of this regulatory uncertainty. ETH is a commodity just like BTC. So this is a critical point that I don't think I see enough people talking about at all, which is bizarre to me because everyone loves to talk about the fact that ETH was a potential security. But now that the ETH ETFs have been approved, the SEC has basically admitted that ETH is not a security, it is a commodity. Now, this was obvious to anyone paying attention. ETH does not act like a security at all. It'd be a very hard time to prove that ETH is a security based on all the facts and circumstances. But in the eyes of the regulatory regime, ETH is now de facto a commodity. And it has been a commodity for years now, but now that the SEC has basically admitted it, what this does is it not only opens up the billions, tens of billions, potentially hundreds of billions of dollars that is part of the ETF ecosystem, but it also opens up Ethereum as an ecosystem and ETH as an asset to all of these other players who have steered clear of it because of the regulatory uncertainty around it. This may not mean anything to me or you as personal individual investors, but this means a lot to these big money investors, the people who manage other people's funds, because there are a lot of punishments for them if they do the wrong thing in the form of fines, possible jail time, things like that. Obviously, there are laws and regulations that they have to follow, whereas for us individual investors, we're not going to get prosecuted for any of this stuff. We're managing our own money. It's completely fine, right? Even if an asset is declared a security and you had been trading it, nothing's going to happen to you. That's just not the way the laws and regulations work. The onus is on the bigger players at the end of the day, especially the ones managing other people's money, which as they should be. Honestly, if you're managing other people's money, I feel like you should be regulated to to hell them back essentially in a proper way, because of the fact that you can't really trust someone else with with money like that. And that's again, I guess, or a big reason why we're building DeFi is because we're trying to build a trustless financial system. But the existing financial system and much of the trustless financial system that we're building will still have elements of trust to it, and will still have need for trust and certain regulations to make sure that people don't run off with other people's money or do nefarious things with them without there being recourse because of that. But on that note of ETH being a commodity here, I think that there is a really nice example of my argument from someone who you may not suspect this would come from, but Michael Saylor. Now, obviously, everyone knows who Saylor is, right? The guy with billions of dollars buying BTC, been doing it for years, and he's hailed as some kind of like hero because he buys so much BTC and just market buys it. Right? He doesn't seem very price sensitive there, but because of this, he's basically one of the biggest names within crypto, and whenever he says something, people tend to listen. Now, traditionally, he's been I guess you could call it Bitcoin maximalist, where he was basically like, it's only BTC, everything else is a security, everything else is trash, there's no second best, you only have one chair, all the memes that you've seen around Saylor. But for those of you who haven't seen it, I think it was a couple days ago, there is a video clip of him, of Saylor doing an interview with Peter McCormack on what Bitcoin did, where essentially he was saying that, okay, well, now the SEC has approved the ETH ETFs, he can imagine a world of not just Bitcoin or BTC, but a world of crypto assets, a world of, a crypto as an asset class, rather than just Bitcoin as the asset class that represents all of crypto here. Now, the reason why I bring this up is because this is a huge pivot for Saylor. If you've been following him for years, you'll know that he has never really acknowledged Ethereum or ETH or other crypto assets other than to basically, FUD them or basically trash them. But then he's going on what Bitcoin did, which I would consider to be one of the most Bitcoin maxi podcasts out there, with one of the biggest Bitcoin maximalists, Peter McCormack, and saying straight to his face that he thinks there's going to be a whole crypto ecosystem, and he thinks that eventually people will have maybe 60% of their crypto portfolio be BTC, with 40% being other things there. Now, as I said, that's a huge pivot, but this is what I'm talking about when it comes to the regulatory uncertainty being lifted here. For someone like Saylor, he definitely wanted to stay on the right side of regulations, on the right side of the law, because of the fact that he was doing it through MicroStrategy. And there's all these regulations on him. So obviously I didn't agree with what he said. And obviously I think that him changing his tune is hilarious because of the fact that he seems to only have changed it because the SEC has blessed ETH and, by, I guess, virtue of blessing ETH, blessed the rest of the crypto ecosystem as not a security. But I think the way he's thinking about it and the way that he's pivoted, we're going to see that same thing repeat across all of the TradFi ecosystem now, especially since BlackRock's involved too. I mean, the amount of power that BlackRock wields generally within TradFi is already just absolutely massive. And now they've entered crypto in a really big way with these two ETFs that they now have, the BTC and ETH ones. And Larry Fink's going on mainstream media talking about tokenization. And now this regulatory uncertainty is lifted here. And it's not just the ETH ETFs being approved. It's also the fact that that Fit 21 bill is making progress through I guess the political sphere in the US. Maybe it doesn't get passed through the Senate, but hey, there is movement happening here, and there is a shift in policy, and there's a shift in attitude from the Democrats, and I really do think that this has been completely underpriced. It's not even priced in at all at this point. The crypto natives don't understand this, for starters. I would say the vast majority of crypto natives are degenerate gamblers. They do not understand this at all. They're just interested in the short-term quick bucks that they can get, meme coins, whatever it is. There's nothing wrong with that. Like I've said this before, but the point is that if you want to look bigger picture here, you want to look longer term than a few weeks or a few months, this is just a monumental event for all of crypto, not just for ETH, as I explained the other day. This is for all of crypto, but especially for ETH. There is so much money that's now going to be flooding into ETH that just wasn't going into ETH before due to this regulatory uncertainty. And quite literally, it is hundreds of billions of dollars, guys, if not trillions of dollars over the 5 to 10 year time frame that's going directly into ETH, and BTC, of course, and potentially other assets down the line, but maybe not for a few years there, which is obviously hugely positive for ETH's value here and hugely positive for the Ethereum ecosystem. So I'm as bullish as ever, guys. Like this. Obviously, it's kind of funny for me to say that the ETH ETFs being approved has made me incredibly bullish on ETH, but as I just explained to you, there is this kind of digesting that still needs to go on with the wider ecosystem, where it's only been, a week since we found out that the ETH ETFs were actually going to get approved. There is no way that the TradFi ecosystem has even begun to price this in. They move incredibly slowly. Crypto moves very quickly, and crypto still hasn't priced it in, mind you, but the TradFi ecosystem moves incredibly slowly. It's going to take them many months to digest this, many months to come to terms with this and get a strategy around it, because they have, those regulations in place, because they're a 9 to 5 ecosystem. They work on business hours, because they need to put in all the infrastructure to support this stuff. It's going to be a multi-year kind of play here, guys. And as I said yesterday, I truly do believe, 5, 10, 15 years out from now, ETH can be in the tens of trillions of dollars of market cap very easily. I really don't think that it's going to be a hard trek to get there, given that ETH is a commodity. It is a commodity unlike any other commodity, by the way. It's very much better than BTC, as I've explained plenty of times on the Refuel before. But because of all of that, I think that ETH is going to continue to be the world's best asset and the world's best commodity in my eyes, or at least digital commodity, of course. And the Ethereum ecosystem is going to continue to grow, which feeds value directly into ETH as an asset there. But I'm going to leave that bullish rant there for today, because I'm already at the 15-minute mark and I've got a bunch of other stuff I want to get through here. But yeah, hope you enjoyed that. But I guess nothing's priced in at this point. At this stage, that's my entire point here, guys. Even if you think stuff is priced in, it's not. I'm telling you, I can guarantee this. Oh, I'm not going to guarantee it. You guys know I don't really like guaranteeing things. It's 99% that it's not priced in at all here, because it just hasn't had the time to do that. It takes time, guys. It may seem like it should happen faster than it does, because we're, terminally online, addicted to crypto, but really it just takes time, guys. And it's going to take months, it's going to take years, but we're going to get there. And long-term investors are the ones that are rewarded. Yes, you can go degen and play degen games and try and do short-term things, but maybe just do that with a small part of your stack and have the bigger part of your stack be in the long-term, more secure investments here, so you can sleep comfy. I mean, for me, this got going on, 8 years since I've been invested in ETH, and it is still by far my comfiest hold, guys. I have never felt more comfortable holding an asset in my entire life. And it doesn't matter what asset it is, crypto or otherwise. I don't feel that comfortable holding anything else. I don't feel that comfortable holding Australian dollars in my bank account. I don't feel that comfortable with my, my house that I have, some of my other possessions that I have, whether they be investments or otherwise. I feel extremely comfortable holding ETH as an asset here. And really, it comes down to the fact that ETH is a decentralized commodity that the world has just not seen before, and that has so much growth ahead of it that it's just insane for me not to keep buying ETH even at these prices, which may seem relatively high if you went through the bear market, where you had the opportunity to buy ETH at 1 to 1.5k for a little while, and then 1.5k to 2k for a little while. Now we're at 4k basically. So, and that that can quickly get away from you as well. We could be at 5 or 6k in a couple of weeks. We could. I mean, that's how fast these things tend to move. But still, I don't see anything else out there that I can justify putting money into as a store of value, as a savings account for long periods of time, other than ETH there. But anyway, end that bullish rant there. Got a few other things to get through. So first thing here was that Taiko is now live on the Ethereum mainnet. Now, I know what you're thinking, probably, another layer 2 going live, what's the big deal? Cool, we already have enough layer 2s. I generally agree with that statement, that there is a lot of layer 2s right now, and a lot of them are live and running, and we're already kind of seeing some pull away from the pack as opposed to others. Obviously there's Base and Arbitrum that have pulled pretty heavily away from the pack, but there's others on their tails, guys. There's others growing here. But when it comes to Taiko, they're doing something very, very different to what the other rollups are doing in a few different ways. But what they've launched today is particularly exciting, because they've launched their first version of their based the BCR, which was called the based contestable rollup. So essentially this means is that not at launch, but very soon, they're going to be sequencing the transactions that happen on Taiko through Ethereum block builders, through Ethereum validator set, essentially here. And the reason why this is exciting is because there is a thesis out there that the ultimate end game for sequencing is for sequencing for rollups is essentially they just use the L1 validators. Because when you think about interoperability between the different L2s and between the different rollups, and you think about things like shared sequencing and the AG layer from Polygon and a few of these other efforts out there, the toughest battle of all those solutions is basically creating a shelling point for that solution. So for example, the toughest point of a shared sequencer would be to get everyone to use that shared sequencer, right? Or to get everyone to essentially cooperate and use that thing. And the same is true for Polygon's AG layer. And the uphill battle is getting people to actually use it, getting the projects to actually opt into it, which is, not to say it's not going to happen, but it is an uphill battle, right? And I'm still very bullish on those solutions, but when you kind of look out, 5-10 years from now, and you think to yourself, okay, well, what could the potential end game be for sequencing? What makes the most sense? you arrive at the conclusion that the most sense becomes the Ethereum validator set as the shared sequences, so to speak, as the sequencing network for rollups. And there's two reasons for this. The first reason is that it is a very obvious Schelling point. Everyone already uses Ethereum. The rollups are using Ethereum as their settlement layer already, right? It is already the de facto Schelling point, the Ethereum blockchain itself, Ethereum L1, the Ethereum validator set. There's no need for the rollups to opt in because they're already in. They're already in because by nature of being a rollup, they're already in. All they have to do is essentially change their sequencing to the Ethereum chain. And because the Ethereum chain is a Schelling point, for every other rollup as well to do this, we could see that being the ultimate endgame, where they all just use the L1 validator set for sequencing. Now, you may be wondering, doesn't that mean that these rollups are going to give up the revenue that they're making by sequencing transactions? No, because what the rollups can still do is make money off computing and executing the transactions, whereas sequencing has got to do with the ordering of the transactions, whereas computing and executing them, as in doing the actual work behind the transactions, can still be done within the block builder network that kind of exists, I guess like at ETH L1, but also at the L2 as well. So they don't necessarily have to give up the revenue that they're making here in order to do this. And by doing base sequencing, essentially what they get to do is interoperate with all the other rollups that are doing this as well. And you have basically a completely interoperable rollup ecosystem. So if we're looking out 5 to 10 years and we're looking at what the end game of interoperability for rollups looks like, I think the logical conclusion is this. And that's what's the most exciting thing about Taiko, to me at least, is the fact that they've actually implemented this on mainnet already. This is not a pipe dream, guys. This is not something that is in theory land. This is not something that we have to kind of speculate on. It's live. Like, I know that I said that the transactions are actually going to be sequenced by Ethereum block builders soon, but the infrastructure, the actual kind of scaffolding here is live right now, today. As I mentioned before, Taiko, did their announcement thread and they're live here. So it's not up in the clouds. We don't have to dream about it. It's reality. It's not just a narrative, right? As I always like to say. So there's that, which is really exciting, but also the fact that because they are the first, they get to prove out this thesis for people, because I'm sure there are a lot of teams out there, a lot of roll-up teams out there watching this and being like, okay, this looks interesting, but let's see how it plays out here. Let's see if this actually works. Let's see if it actually adds, adds value here. Let's see if it actually does what it says it does. And as Taiko begins to sequence transactions on through Ethereum block builders here on the L1, we're going to get more data on that. And then more and more rollups are going to probably end up opting into that, I think, especially if they can guarantee that they're still going to keep the majority of the revenue that they're earning today for the L2s themselves without having to give it up to L1 validators. So we're going to see how that all plays out there. I think that it's really, really cool that this exists. I think that it definitely seems like the obvious end game to me. But yeah, as I said, we're going to have to see how this plays out there. So a big congrats to Taiko for putting this out there, for putting that live. I should disclose here that I am an investor in Taiko. I mean, I couldn't pass up the opportunity to invest in Taiko because of the fact that they were building something very different to the other L2s. Like, that's what I'm looking for these days, especially when it comes to L2s, is that they doing something different? Because there's a million EVM L2s out there now, and I guess, like, that's cool, but hey, I want to invest in teams, and I want to be closer to teams that are doing something different. Taiko is definitely one of those. There are others out there as well that I'm helping as either an investor or an advisor. But yeah, a lot of really cool stuff happening on that front there. But you can go check out Taiko's announcement thread for yourself. I'll link it in the YouTube description below. And last thing I want to say on Taiko is that because they are now live as a rollup on the Ethereum network, they are now posting blobs. So you can see here that Taiko is currently responsible for around 15 to 20% of all blobs posted to Ethereum mainnet, which is comparable to what Base, OP, mainnet, and Arbitrum are doing right now, which is kind of funny because I doubt there is the activity to match that. So it might just be the fact that they've just gone live and they have to optimize how Taiko handles blobs. So I'm going to keep an eye on how that's going forward. But it does mean that blob prices are back to, or I guess like the usage of blobs is back to a level that has not been seen since, I believe, quite a while now, actually. I mean, this is only the past 5 days chart, but I think that if we go here and we can maybe see this, yeah, I think this hasn't been seen since that mania from inscriptions. So since about April here. So that happened pretty quickly. But this goes to show you guys that each time another rollup comes online and posts blobs, it's just going to keep getting filled up. And this is what I've been talking about a lot, where I basically said that, right now we're not at capacity for blobs, but that's not going to last forever. There's going to be more and more rollups coming online. There's going to be more and more demand on the rollups that already exist. They're going to be using more and more data over time. And then obviously there's a limit to how much data can be used with blobs. And then we're going to see how that all plays out when we kind of, I guess, like increase the size and count of blobs, as well as doing things like PeerDAS and so on and so forth, right? So a lot of really interesting and cool stuff happening there. And great to see that all continuing to happen. You can go check out the blobs dashboard here from Hill Dobby. I'll link it in the YouTube description below for you to do so. All right, last up, I just wanted to speak to this tweet that the Ultrasound Money kind of account put out today. So they have a new tracker live on the Ultrasound Money website. Now, this is the flippening tracker. Now, for those of you who don't know what the flippening is, I think you all know what it is, but it's basically when ETH's market cap flips Bitcoin's market cap. And it has been a narrative for a very long time now, since I would say 2017. And ETH came very close to actually flipping BTC in 2017, but since then, it hasn't really gone back up to where it was. But this new chart here has this kind of weird TA or technical analysis happening on it, where it's drawn this massive triangle from the genesis of ETH to today, and showing that, hey, okay, if this trend continues, the flippening is only about 2 years and 3 months away. Now, I do want to point out that I think this is ridiculous. Like, I love the Ultrasound Money website. I love the Ultrasound Money meme and all the people behind it. But this is kind of ridiculous, this trend line. I don't think it represents anything. I think that it's pure kind of hopium. It looks like the stock to flow chart to me. So I wanted to point out this chart for that reason particularly, because I saw that and I'm just like, I'm not really feeling it, guys. I'm not really vibing with it. And also the y-axis is ridiculous. It goes 1%, 10%, 100%. Like what? It's just a funny chart all around there. But regardless of that, I think that it's still an important kind of topic to talk about, because of the fact that the flippening narrative is usually something that obviously people talk a lot about when the ETH BTC ratio is going up. Now, the ETH BTC ratio has gone up quite a bit since the ETH ETFs were approved. Essentially, it's gone up from 0.046 to 0.056, which is a lot relative to where it was. But if you look at the longer term chart here, I mean, we're still technically in a downtrend. And I'm not going to say it's not going to keep outperforming from here. I do think it will. But the premature celebration always makes me laugh, because it's like, guys, like, let it breathe, right? Like, I understand being excited about it. I understand it's something that a lot of the ETH OGs have wanted to see happen for a very long time now. But I wouldn't be celebrating over a movement like this. What I would be celebrating is when the trend reverses, and reverses in a really big way here, where it's confirmed reversed. But at the same time, there's a reality where ETH doesn't flip BTC in this market cycle either. I mean, you could go to like 0.12 or something like that on the ratio. That wouldn't be the flippening. The flippening on the ratio, I think, is 0.161 last time I checked. Now, ETH could go to 0.12 and then just stall out there and then go back down from there. But what I will say about this is the general trend of ETH BTC has been up over the longer term, right? And ETH performed much better against BTC this bear market, or I guess like the bear market that we just experienced, over the last bear market. So for those of you who don't know, in 2018/2019, ETH went down 90% against BTC, whereas the bear market that we just got out of, or that ETH BTC seems to have just got out of, from peak to the low, it only went down 50%. Yes, the peak was not as high as the previous peak, but the relative performance was a lot better here. And now, because ETH has an ETF now going forward as well, I do think that ETH BTC is going to be generally a strong performer going forward here, because I did say before, I think on the refuel, I don't know which episode I said it on, I said it a little while ago, I do remember saying that because of the fact that we have essentially the BTC having an ETF and ETH didn't have one, it was only natural that the ETH BTC ratio would bleed, because BTC had all this fresh money going into it that ETH didn't have. That soon, when the ETH ETFs go live, is no longer going to be the case. They're going to be on relative equal footing here, depending on flows as well, but they have access to the same capital. I do think eventually ETH is going to attract more capital than BTC, because not only is ETH a store of value commodity, it is also a tech bet as well. So like, imagine you're seeing Nvidia go nuts right now, and you're like, okay, well, Nvidia's going nuts, AI is hot, and crypto starts getting hot again. You're like, oh, I want to buy something that's, diversified away from Nvidia, from Microsoft, from Apple, all these tech companies that is distinctly different. And then here comes BlackRock and others saying, hey, Ethereum's a tech bet and you can buy ETH, and it's also like BTC where it's a crypto and where it is like a store of value, and hey, it has deflationary supply. And then eventually when they have the staked ETFs, they can be like, hey, you can stake it and earn a yield. And we all know how much you guys love passive income, right? How much you guys love dividends. So, and you know, there's the burn, right? I can think of a million ways to shill ETH, right? But I'm not going to get into it now. But that's what we're playing with here, guys. That's the bullishness that we're playing with here. So yeah, but I just wanted to make a small comment on that and discuss that a bit more broadly there. But I think on that note, that's probably going to be it for today's episode. So thank everyone for listening and watching. Be sure to subscribe to the channel if you haven't yet. Give it a thumbs up, subscribe to the newsletter, join the Discord channel, and I'll catch you all tomorrow. Thanks, everyone.